If you want to make $1 billion exit, you need to understand what an IPO is. Quite simply, an IPO is just your initial public offering on the stock market. So for many founders, this is the moment where their life changes forever. And my next guest is an expert on getting entrepreneurs their $1 billion exit, and he is about to teach you his secret sauce on making it happen so that you too can enjoy your pursuit of making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Peter Goldstein. Peter is the founder and CEO at Exchange Listing and MS Capital, where he leads entrepreneurs and their investors to exit profitably through IPO. He's a regular contributor to Forbes, Entrepreneur, NASDAQ, and the author of the Amazon bestseller, The Entrepreneur's IPO. So what this means is that Peter understands the complicated world of going public, and he's about to give us a masterclass on how to IPO in our pursuit of making billions. So, Peter, welcome to the show, man.
Ryan, thanks so much for having me. You know, I love the show and really your community, right? Your community is my community as we've talked and get to know each other more. You know, it's really about being with like-minded people, which to me are global entrepreneurs, you know, investors who have that same pursuit of building and growing and participating in the entrepreneurial communities around the world.
Yeah, thank you. You're very kind. We've been very fortunate to be in over 100 countries around the world. In the top 2% in the world, the show has grown, and we are certainly honored to have guests like you, and that is precisely why. So it has been an absolute privilege to have you on the show, and I was very excited to start talking about IPOs, and you're the man to do that. So before we get into all that big sexy stuff and all the things in IPOs and high finance and all those things that happen, let's address the beginners. In the beginning, when you're either running a company or you're looking to list a company, either way, right? Two sides of the same coin. How do beginners in this game, how do they win and how do they not lose in the early days?
You know, I love this, right? I'm 60 now. I started my first company when I was 24 and I had my first exit at 30. And I think what I learned early on how to win is make sure there's a market, right? So you need to find your market early. And whatever it is that you're doing, product, service, technology, you know, you can build the greatest widget, so to speak, in the world, but if there's no market for it, you're never going to be able to have a profitable business. So for me, I start with find your market, find it early, and then set yourself up to understand that there's a demand. Because with no demand, there's no real ability to grow and scale your business. And then for me, that's stage one, step one, right? And from there on, then you can look to grow and bring a compelling, or as we like to say, an irresistible offer to market, where you can then test, look at the market, look at the demand, get the feedback, you know, measure how you're rolling out your business, and then ultimately adapt. You know, to me as an entrepreneur, now 35 years in, it's constant. Adapt, you know, pivot if needed, and the ongoing of persevering, right? No matter what, you need to apply that kind of entrepreneurial mentality to the marketplace that you've established for your product and or your service.
Man, I love that. So as we're starting out, how to get some early points on the board, what Peter and I are talking about, Peter, is he's saying, hey, like, look, you're going to have to do a lot of stuff. I'm totally putting words in your mouth. Forgive me for that. But you're going to have to do a lot of stuff here. But one of the most important things after 35 years, folks, this guy's telling you the most important thing in the early days is nail your market. Sometimes we call it venture capital product market fit. And he just walked you through. So you set up what I like to call, maybe you call it something different or the same. I call them feedback loops. And so you have build, measure, learn, right? And measures from a test. And so whatever you learn, that'll lead to you either pivot, as you mentioned, Peter, or you persevere, keep going, right? We're on to something, or be like, yeah, we built this new feature rollout. Everyone hates it. All right, time to pivot. Let's not keep throwing money at this thing. But either way, getting your market right. And then I know maybe we won't go in this direction, but then if you can go and stand in front of investors, if you're an entrepreneur, or heck, even if you're a fund manager, if you can actually show that what you're offering, a lot of people want, and here's the proof, it's not just my gut feeling, that might work with some investors, but maybe not too many of them. But you can actually say, look, we've conducted so many micro tests, collected feedback, and aligned it until we got our market right. Man, now we're in a position where we have a very compelling market with that offer. I absolutely love that. Now, Then we also mentioned there's a follow-up question to this is not only how do you win and get some early points on the board, but how do you avoid getting knocked out and wiped out in the early days? What would you say to people who are just starting out? How do they not lose?
The old adage, Ryan, cash is king, right? So, yes. For me, I start with being able to optimize your cash flow. And as you're starting out, it's very difficult to do. So where I like to look is begin with those assumptions that you're making about your business, whatever they are. It's your best guess or guesstimate on how you're going to measure and make those assumptions from a financial forecasting and a cash flow perspective, right? So if you've tested, as we talked earlier, and then measured, I love that old adage, if you can't measure it, you can't manage it. So I start with cash flow. And then really it's about building that commercial viability to scale. So those assumptions have to apply to your ability to scale your business, right? So I look at then, cash as we're talking about cash flow. And then the other side of that is the human resource. So in order to really build your business and optimize your cash flow, for the most part, you're going to need people to be able to roll out and build as you want to scale. So I like to kind of, start there and function with the understanding that those assumptions are constantly going to be tweaked and adjusted and adapted to your cash flow and plan for the uncertainty. I mean, no matter what, we've all learned there are things that you can plan for in your business, and then there's the unplanned, right? So I'm a big advocate in how not to lose about realizing that you have to embrace uncertainty. The one thing I know for sure as a serial entrepreneur is uncertainty is inevitable. It comes with being an entrepreneur. And I think it's a very great thing. Like a lot of amazing innovations have come from uncertainty. So I look at it as a necessity to embrace that, where it's not really even an option to not embrace uncertainty. So as an example, if we're going to market on a product, we've planned a product launch. And inside of that, you have your assumptions, you've planned out your cash flow, you've planned out your growth plan, you've tested your market, and then things have come along that are completely unplanned. Changes in the market, right? Changes in consumer preferences, competitive entries into the market, as we're all still kind of, readjusting even to COVID as an example. That is one of the most unplanned events we've all faced in our lifetime, right? And inside of that uncertainty, amazing innovations came. Here we are talking to each other, where we've all learned that we can do business remotely all over the world through Zoom and through other video channels that we never really utilized. At least I didn't extensively post-COVID. I was in more of a traditional business model. So I just look at that, right, as saying, embrace the uncertainty, distinguish between those events that are planned and unplanned. And out of that, embracing the uncertainty, all kind of benefits come. I think you're a better leader if you understand that you need to apply to your business the events that are going to come. And along with that comes personal growth and what we would probably look at as grit, right? Like that strength as an entrepreneur to know that you can endure through uncertain events that are going to come your way. And it is almost guaranteed that those are going to come. So if you plan for your cash flow and you build in for the fact that events are going to come, both planned and unplanned, you have a much better opportunity to not lose as you've optimized for those events in your cash flow going forward.
Yeah, I love that. So, as you were talking, we're saying all these shifts these seismic shifts that happened during COVID, right? And you mentioned Zoom. My thought, was this a blockbuster moment? I don't know. But what happened to Skype? I mean, Skype was around way longer than Zoom. And then maybe I wasn't working at the company, but maybe the two different leaders, one was ready for the unexpected, one was not. Let's just assume. I don't know. I haven't read a case study, but I'm sure there will be to be like, how did Zoom, who was such a way younger company compared to Skype, which is owned by Microsoft, like talk about David and Goliath moment, so to speak. And literally Zoom completely ate Skype's lunch right during an unplanned event. Everything flipped. Right. I remember before COVID, I would work with large consulting firms like Accenture and Deloitte, and they would all use Skype. And now it's like when you see someone with a Hotmail address, you're like, really? You still rocking that. Good for you. One of the few. So this is one of those things of how not to lose. This is what Peter's talking about, is saying like when those unplanned things happen, big changes are coming. And depending on how you deal with those, and you keep me honest here, Peter, but depending on how you deal with those in your company or your investment firm or whatever it is, being ready and just acknowledging that there's known unknowns and unknown unknowns. And when you're ready for those as best as you can, and you've prepared for that, then that change can actually favor you and you can leapfrog someone as big as Microsoft, one of the biggest companies in the world, and you can come out of nowhere and eat their lunch on one of their products. It's absolutely phenomenal. And I literally just got off the phone before this interview, Peter. It was like one of my friends. He has $500 million under management in real estate. He was telling me about all the woes in the market. And you know what he said? He's like, this is great. I have been preparing and I have shifted my company to be ready for this moment. He's like, the only stressful part is it's like when I was a kid before Christmas, right? Christmas Eve, you can't sleep because you know the good stuff is coming and you're ready for it. That's literally how he feels. So he knows his business could absolutely double, if not more, in one big swoop when the market and all of his competitors were not ready and he is. That's going to change it. And that can absolutely change your life when you're building a company. Would you agree?
100%. And I would actually apply that, to my sector. I'm in the IPO, advisory business and we invest, both pre-IPO, IPO and post-IPO. And, where I see things, we're planning for the market upswing. And I believe it's not an if. You're like you were referring to, that Christmas Eve where you're going to eventually Christmas is going to come and you're going to get to open those presents. Well, I've been building for it. 2021, we saw one of the best IPO markets in 20 years. Here we are, 2022, 2023, beginning of 24, one of the worst markets we've seen in decades. So I went the other way. I've built my infrastructure. We've added on, aspects of both, our headcount, preparing for the upswing and preparing companies for that time when we know the market is going to pick up. I'm also raising capital now inside of our investment fund, our pre-IPO fund. We perform beautifully as a contrarian. We've been investing because valuations are lower, even in the worst market in almost 3 decades. We've shown 50% returns on our pre-IPO investments. So I think the smart money and smart management are looking at when the market will uptick and when the market will open up. So I 100% agree, that we're at that tipping point, and it's really not a matter of if, it's a matter of when. I've seen enough cycles now to know, and I think it really is important for listeners to understand that there is going to be a shift. Things have already shifted post-COVID. The money is on the sidelines, right? We can talk about, all the money that's sitting on the sidelines, and that money is going to be deployed. There's no doubt it's coming. So are you preparing your business? Are you preparing for the shift in the market? For us, clearly as, focus on the IPO sector, I don't know that it's going to happen in Q1 or Q2, but I'm very bullish on the fact that it will come during 2024 and will really hit its stride as we look towards 2025.
Man, that's brilliant. So we keep hearing about, and I love this. I love talking about the markets. In fact, this is something I've wanted to talk to you about. What are you seeing out there? Because you keep hearing about dry powder. For those of you who don't know, dry powder just means a lot of cash waiting to get invested in something. So a lot of investors are waiting for the right time or the right deal, or they're a little more picky. And so we say there's all this dry powder on the sidelines, and it's going to flood into the market once the conditions are right. Any idea how much dry powder is waiting for VC and PE right now?
The estimates, Ryan, are close to 3 T as in trillion. Largest surplus that I know I've seen in my career and in my lifetime. And what's interesting is that that's across the board. And what I mean by that is that's venture capital community, that's the private equity, and it's the institutions that are investing into equities in the open market. So we're looking at all that, knowing that money will be deployed and can be deployed as things open up. And it's not just one sector. It really is truly across the board. And so what we're experiencing are money is coming in, it's trickling now. And when it's coming in smaller amounts and at lower valuations, which is why I'm so bullish on investing now. Because the same company in 2021, okay, maybe it had lofty valuations, maybe it was overvalued, but now we're seeing 30, 40% decrease in the same company with a valuation that's much more palatable. And we're actually investing at a discount to where their expected market valuation is. So I think across the board, companies now, hopefully you don't have to do a down round and you've been able to sustain. And I think that staying power is critical. It also ties into that cash flow planning, right? Knowing that it's difficult and can be challenging at times to be able to access capital either at or above, your last round. So we're seeing that that's going to be picking up. And so we're positioning ourselves and our clients and our investment portfolio to look at opportunities now. And I think investors are looking more and more for just fundamentals. They're looking for cash flow. They're looking for traction within the market. They're looking to know that that company really has the ability to scale and to provide, a return on the investment and a return on assets.
Man, I love that. So basically what I'm hearing, folks, and Peter, you keep me honest, is valuations are lower. There's a ton of money that's out there. This, by the way, if for those of you who are investors like Peter and I, it really is Christmas Eve. This is phenomenal. So it's just like getting ready for this huge gold rush. And so valuations are lower. In other words, everything's on sale. Great. I like to go shopping in a good sale. Who doesn't? So, all right, everything's on sale. Great. Valuations are down. Wonderful. Now we're able to take a breath. And it was a pretty hot market. So we're about back to sanity, sane valuations, not insane valuations. Like we had some sticker shock the last couple of years, but now valuations are better. We got $3 trillion in cash. Some of those are likely most of the people listening to this show, right? And so what we want is we want to get in front of that. So I know you're a 506c and you can talk about your fund. So you guys are investing, and it sounds like I'm not, it's not any paid promotion or anything, but anyone who has an IPO fund like yourself, and we'll get into the details of your fund in a minute, but anyone with an IPO fund and anyone going public, this is a great time to start getting yield, is getting in right when everything's on sale. All the cash is there. You get in your position and then let the market literally carry you to the promised land. Would you agree in that sentiment?
I completely agree. And I think we also, Ryan, it's important to look at the flip side of that, which is how does that impact the founders, right? How does that impact, the management team with their current investors and their current shareholders, as well as the VCs? I think because they need capital to be able to grow their business. There's both sides of that coin. So I think as yields start to increase and investors start to see the growth and return on their investment, that's also a very strong thing for the founders and for the VCs, right? So the founders will be able to have more capital come into the companies. They can begin to scale and grow and fulfill upon their visions. It's why I love working with entrepreneurs, because they're forward looking in their visions. And in order to be able to fulfill upon that, they need to have that kind of perfect storm of working capital aligning with their market, aligning with, the growth and the scaling of their business. So I think as we see performance increasing and more money coming in, specifically in my sector, where as IPOs are coming out and they're starting to show good returns, that will increase capital coming. It'll also increase the number of issuers that are coming to market. So that's why I think where this is going is a very much of a really mutual benefit. So it's not just a one-sided where one party or the other has kind of this, upper hand. I think we're striking a nice balance that will come up here, ongoing through 2024 and 25, where we've had an adjustment into that valuation. So all sides have the ability to really get a reasonable return on both their capital and the access to capital to give them the ability to grow their business.
Brilliant. I love that. So now let's round third base. Let's give our listeners the doctrine of Peter Goldstein. So what we'll do, I'd love if you have just 2 or 3 different areas that you can help our listeners to gain competitive advantage, because I hear it all the time from fans. Is they're a little jealous that I get all this FaceTime with brilliant people like you, and they're like, man, this is the closest I could get is listening to your show. And so listening to the show, if these people were here in the audience, what are maybe 2 or 3 things that you would say, look, what I'm saying all boils down to these 3 things? What would you say?
Well, my filter, Ryan, is because I work inside of the capital markets. I look at things through that set of filters and through that mindset. I've had the benefit of taking my own companies public. I've been a licensed investment banker. I've been an entrepreneur, now for 30 plus years. And I think because I'm organized around the capital markets, the first thing I would say that I've learned, whether you're looking to sell your business, to do a merger, whether to do acquisitions and roll up, to look at some form of a trade sale or financing, or even ultimately to do an IPO, it's preparing your company for that liquidity event would be the first place that I would start. So what do I mean by that? I would advise, entrepreneurs to look at running their company as if it was already public. The discipline that comes with running your company through a set of standard operating procedures, under financial reporting structures, of governance, and really of transparency, kind of forces you as an entrepreneur, especially for founders that are used to doing business their own way and in their own style, to start conforming to a better set of practices, maybe best practices, if you will, in having the entire organization operate in such a way that it's focused on shareholder returns, on profitability, on efficiency, and on really maximizing the benefits to all stakeholders. So first and foremost, run your company as if it were public. I recently wrote a book, Ryan. It was my debut book for entrepreneurs about the pathway to going public. And people talk to me about, well, what if I don't want to go public? What other advice do you have? And it's really ultimately is the same, because the discipline necessary to go through a pathway of going public is the same discipline that you really could apply to any stage of your business. You don't need to be doing an IPO to be able to set up those kind of procedures and structures and oversight. And people don't think about this typically until they get to the tail end, right? Well, they want to now get to the point where they want to do a trade sale, or they want to look at bringing in financing, or they may dream of doing an IPO. So all of those roads lead towards increased valuation and increased return for all parties.
Man, I love that. So run your company as if it was public. That is phenomenal. And Peter gave us a few insights of what exactly he means. So performance metrics, reporting structures, SOPs, oversights, transparency. I mean, what investor wouldn't love that? Of course, they're going to love that. And that, by the way, friends, so too often entrepreneurs get focused, and right or wrong, they get focused on great product. Okay. I mean, you're not wrong, or service if that's who you are in your startup, but also how the company is run can also add value, and adding value increases valuation, and valuation kind of is an important thing when you list as an IPO. That's your exit price. And so what Peter's saying is like, look, you can just run it better from the beginning right now. So often I like to call it window dressing. So I was brought in when I was to be a CFO of one company. When I was brought in, they were preparing for a sale. And so we would do things like window dressing. So get the processes down, standard operating procedures, reporting structures. We literally did all of that just to prepare for a better valuation, which gets a lot of money in the firm, and it dilutes the founder a lot less. So what Peter's telling you, you are going to win on so many levels if you just do this first thing. But we're not done. So what are maybe another one or two things that you would recommend to people that you could leave behind from all of your 35 years of experience?
Yeah, I think to be able to have a competitive advantage, first you have to understand where you fit in the competitive landscape. And by looking at valuations of comparable companies, you can then begin to apply, a capital table and a cap stack and a valuation that you can measure against, your competitive landscape. So I think a lot of entrepreneurs, I know I've done this in the past, look at very lofty valuations. And like you said, we tend to fall in love with our babies and or our product and or our service. And then we want to have, the top of the scale of a valuation. So I think it's really important to develop both a capital stack and a cap table that are positioning you properly within the realm of competitive marketplace, so you can build a valuation that's comparable now to attract capital. And I typically look at that as a discount to wherever you think you may be headed. Every investor wants to know that there is a return on their investment, and ultimately that there's a liquidity plan, right? So the cap stack and the cap table, preparing for your next round, make sure you have a defensible valuation is really where I'm going, right? You can look at comps, you can look at your product fit, you can look at other funding milestones. There's plenty of data available to be able to measure yourself against. And then, of course, anything that you can do to stack up, whether you can enter into new agreements, letters of intent, new product, new technology, new offerings. And then I like to really look when we're talking with companies about what kind of capital have you raised in the past? How much have you raised? What valuation, of course, but more importantly, what did you do with the money? How did you apply it to your business? What were the outcomes? What were the lessons learned? What were those measurables that we can look at? And then I like to look forward and ask the same set of questions. How much money do you need now? What's the use of proceeds? How is that going to move the needle on your business? And then we have a basis of comparison and contrast, where so many entrepreneurs, and I would say even investors, want to look at current and future. I like to take a look at the past before I want to look into the future. And I think the competitive advantage to entrepreneurs who can organize their mindset that way when they're sitting in front of investors or preparing their company for the next step will get great value out of the ability to look at that valuation and those funding milestones, use of proceeds, past and present.
Man, I love that. So what you're talking about, as I'm sitting here listening, what you're talking about, I was like, man, if I was an entrepreneur, this is gold, because Peter's telling you from the perspective of an investor, because you got to close the deal to get the valuation. You got to lock that in. And so you have to have an investor agree that you are worth whatever it is that you're worth. So he's saying like, look, run it this way. Make sure your cap stack is set up this way. He's literally giving you all of these, the cheat codes for getting that top valuation. So I see you, man. You're doing some good stuff here. So what about a third lead behind that you could leave for our budding entrepreneurs and venture capital investors? What would you say is a third important point in your world?
Ryan, it's tied very closely to the second one, which is really about leaving flexibility in your valuation. What I've learned, also the hard way, is especially in the IPO world, investors don't set the valuation. Excuse me, the companies don't set the valuation. The bankers don't set the valuation. It's the investors that ultimately, and the market drives that valuation. So what I like to do is make sure to give the listeners, especially the entrepreneurs out there, an understanding that when raising capital, be very cautious about setting a valuation. As an example, when we're doing pre-IPO work, we're very cautious with our companies, our investments, to not set a valuation that's going to hurt them when they go to the next round. And we do that actually by utilizing convertible notes at a discount. So we'll provide the company with capital that's done in a convertible promissory note that would be at a discount to the next round. And that's the kind of thinking that I would want entrepreneurs to have and understand, that gives them flexibility. Because as we've talked about, the market shift constantly. And there really is this dance that ends up happening when you go to market. It's one of the things I love about the dynamic nature of an IPO. The joy I get of, working with CEOs and working with companies and working with bankers, investors, is it's constantly changing. There is nothing static about taking a company to market to raise capital, especially when you're talking about the fluidity of the capital markets. So the takeaway, and I think the mindset of when you're seeking capital, to not lock yourself in, to give yourself flexibility. We're all for bringing in equity and common stock valuations that are reasonable. Don't get me wrong. It's just there's a time and a place, especially through my filters, that it's really important to make sure that you leave flexibility inside of the valuations at the right time when you're going to market.
Man, that's brilliant. So you heard it from the master himself, the IPO king here. So, before we wrap things up, is there anything else that you'd like to leave behind? And, anything, any mention on the fund, anything at all?
I appreciate, the opportunity. First off, if anybody's interested in the book, I'm very proud of it. It's not just my writing of the book. What I did, Ryan, is I interviewed, so there's 12 chapters. In each chapter, there are 2 professionals, members of the New York Stock Exchange, the NASDAQ, even the London Stock Exchange, who have given their tips in addition to mine and summaries around the pathway to an IPO. So for your listeners, just as a way of saying thank you and giving back, I'm happy to offer the book. You guys just pay for shipping. The book is free. You can, find me on LinkedIn. The book's for sale on Amazon, but I'd actually prefer, to offer it to the listeners. Just DM me on LinkedIn. We'll communicate with each other and we'll make arrangements, to get you the book. It's recently come on sale. I wrote it during COVID. It was my COVID project. And I was living in Europe. I lived my part-time in Europe and part-time here, and found myself, like many of us, isolated during COVID. I said, what can I do to create some form of a value that I can give back and some legacy? And so during the course of COVID, I wrote it. I self-published it, I have a great foreword written by David Meltzer. For those of you who don't know, he's a phenomenal entrepreneur and a great friend and a mentor to mine. And then I interviewed all these different professionals who wanted to participate and contribute to the community at large. And I'm focused on the small cap and micro cap, which is that entrepreneurial community. We work with companies all over the world. Our clients are both domestic U.S. as well as foreign. So it's just a gift from me to the listeners, and most happy and to connect with anybody. In addition to that, if you're an entrepreneur and you just want to have some dialogue around going public or the IPO or markets, and or an investor who wants to look at, the investment community, I love this stuff. I'm passionate about it. And most interested in being able to share and enter into, dialogue with your community. The last thing I would say, Ryan, is that we are opening up opportunities for investors under Regulation D 506C crowdfunding, accredited investors only. It's a unique opportunity for ultra high net worth and high net worth investors to be able to participate in what normally is an institutional investment project. So meaning that typically Wall Street institutional investors are getting access to IPOs and pre-IPO capital infusion. we've already created the fund. We've got very nice returns. And now I want to be able to open that up and kind of democratize that opportunity for what was once limited to institutions that can now be made to high net worth accredited investors.
And that's brilliant. So thank you for that. I'll take that bet. That's a good book, man. So, just to summarize everything that Peter and I talked about, run your company now as if you were public, right? Go through some of those KPIs, reporting metrics, SOPs, anything sometimes known as window dressing. That's an important thing to increase your valuation. The second thing is develop a cap stack and a cap table so that you're ready for the next round. Making sure that you don't do anything silly with your financing or the kind of investors or the investor investment type of vehicles that you have. Make sure that you build that, understand what you're getting into. It's not just raising money, but raising money in a structured way so that you allow yourself to continue to raise money from favorable investors. And finally, when raising capital, sometimes just seek convertible notes. Do those things. And then ultimately look for guys like Peter who can help you. You do these things and you too will be well on your way in your pursuit of making billions.